Gold is a funny thing. It has no earnings, no dividends, no quarterly reports. You can't eat it, and it's not especially useful for modern industrial processes. But somehow, it still commands the attention of central banks, hedge funds, sovereign wealth managers, and your cousin Dave, who owns a little physical just in case. The reason is simple: gold is trust on a chain. It's the asset that steps in when fiat currencies feel fragile, when bonds look shaky, or when the geopolitical tea leaves start swirling in unpredictable ways. It doesn't promise yield, it promises stability, and in a world increasingly short on that, gold gets traded. A lot. Global gold trading is bigger than most people realize. Let's talk scale. Each day, depending on the source and how you count it, roughly $130 to $200 billion worth of gold changes hands globally across all markets: futures, spot, ETFs, over-the-counter, also called OTC, and physical gold itself. That's more than the daily volume of the S&P 500. To break that down, hourly, we're talking $5 to $8 billion. Each minute, about $100 to $150 million. Per second, you could argue the world blinks and 2 million in gold just moved. This isn't just day traders poking at XAUUSD, aka spot gold. We're talking about central banks quietly adjusting their reserves, algorithmic traders scalping futures contracts, physical deliveries being arranged via the LBMA or the Shanghai Gold Exchange, bullion dealers hedging forward contracts through COMEX futures, and yes, retail traders like us taking breakout scalps off-key pivots at 7:32 a.m. because we think the DXY is losing steam. We could trade anything: indices, currencies, soybeans, if we felt like it. But we trade gold. Why? Because gold moves. It gives us real opportunities every single day. Whether it's reacting to a Fed comment, a war headline, or just bouncing off a key level, gold offers the kind of intraday volatility that scalpers dream about. Not random chaos, but consistent rhythm. It stretches and contracts in ways you can come to know if you pay attention long enough. That's why our team doesn't try to be masters of everything. We specialize. Because every instrument has its own personality, and developing instinct, real gut feel, only happens when you commit to learning one market inside and out. For us, that's gold. Over time, the setups start to scream instead of whisper. The traps get easier to spot. An edge starts to look a lot like intuition. So no, we don't trade everything. We trade the one thing that rewards mastery. You may be wondering, who sets the price? Despite all these trading venues, there's one main benchmark the world references: COMEX futures. That's where most of the price discovery happens. Spot gold XAUUSD follows it. The Shanghai Gold Exchange reflects it. Even over-the-counter billion-dollar private deals are priced off it. Central banks may not click the buy button on the futures market, but when they rebalance reserves, they're staring at that same number you and I are. And so while gold might feel old school, the ecosystem around it is anything but. It's global, fast, liquid, and surprisingly modern, with price feeds pinging from New York to London to Shanghai in milliseconds. So what are the key takeaways? But first, if you're finding the video helpful, please take a moment to click the like and subscribe buttons and to hit the bell icon so you can be alerted each time we publish something new. We really appreciate it. The takeaways are: COMEX serves as the primary platform for global gold price discovery, influencing other markets worldwide. SGE reflects China's domestic gold market dynamics and often trades at a premium or discount to COMEX. OTC market comprises large private transactions that can influence pricing but lack transparency. XAUUSD represents the spot price of gold in USD, closely tracking COMEX and OTC prices and is widely used by retail traders. If you'd like to learn why the gold market isn't a fair fight, check out the video on the left of this screen. Thank you for tuning in, and we'll see you next time.